Let's get a little more detail on what we're seeing at a macro level, how that's certainly impacting currencies. Luca Santos joining us from ACY Securities. Luca, welcome to Friday.
Good morning. Happy Friday, everyone.
Happy Friday indeed.
Yes.
Now, let's first take a look at what we're seeing on currencies. Quite a bit of news to go off, of course.
Every weekend is a new surprise.
Well, yeah. Well, look, I mean, locally it's all been about the RBA, of course, and what is to come. What are you seeing in those movements of the Aussie at the moment? What's actually driven that higher?
Well, we've seen Aussie at 64 cents, as you just mentioned, and primarily is last weekend, Trump announced the 25% tariffs on steel and aluminium. Australia is a big exporter of steel and aluminium to US. But then he wants to be friendly with us and to say, well, not in Australia, but in everyone else. So Australian dollar is actually getting that underline of the positive impact of the non-having a 25% tariffs in Australia and being able to be a more competitive price from other countries to export to US. So Australian dollar have been gaining on top of that. As well, we did have the RBA doing a 25 basis points cut this week. Congratulations. I think that was more than deserved from what everyone was asking for. Do I think that they could do? No, I don't think they could do that 25. I think they had to. Otherwise, they would be suffering too much pressure from the population of asking for a 25, asking for a 25. People were losing homes because they didn't have money to pay. Savings account were on very low budget. So it was getting harder and harder to maintain your lifestyle, let's say, especially in Sydney. And then surprisingly, just after that, yesterday or 2 days ago, we had the employment change and the unemployment rate. Unemployment rate surged to 4.1%, and the unemployment change was expected to be somewhere around 20,000, the consensus, and it came up to be 40,000, 44,000. So now the question is what they will do next. Well, done, 25 basis points, congratulations. Will they continue? Will there be possibility to do more cuts this year? I don't think so, especially after these sort of inflationary aspects that are coming from the labor market. Then the consumer will try to, the producer will try to pass it on the inflation to the consumer. And then that will be like a big snowball. And we'll just roll and get bigger and bigger. And RBA won't be able to do another 25. I was talking to some people that work on Goldman Sachs, JPMorgan, and they are predicting 3 more cuts for 25 basis points this year. I don't think it will be possible because inflation will keep very sticky in Australia. So prices are still raising, 22% raised prices. Inflation is coming down, yes, but the prices are still into the consumer is still very high.
On that basis then, where do you see the Aussie tracking from here on?
It depends because, again, if we looking against the Japanese yen, not good because Bank of Japan just have been very hawkish towards the monetary policy, and that is making the Japanese yen very, very strong since 3-4 weeks ago. Against the US dollar, most likely 64.5, 65 in a very short term. But there's no much predictability where we should be looking at now to short or long. I guess we should be waiting for more data. I would be like a central bank now. I think we should be waiting for more data to decide what it is we should be longing or shorting the Australian dollar into or on economy.
How do you see the health of the US economy at the moment? Interesting, we were just talking about Walmart. Perhaps a bit of a bellwether economy.
Yeah.
Showing perhaps some signs of weakness there on reflecting on perhaps what we're seeing from the US consumer. A lot of speculation about the Fed's next moves. What are you seeing there?
Well, Bostic was expecting 2 or 3 more cuts, if I'm not wrong, from the FOMC, from the Fed this year. But when we look at the CME Fed Watch too, I always mention CME because it's something that everyone can have access to. It's public, it's free. But when you look at the future rate pricing, they're not expecting 3 rate cuts. They're not expecting 2 rate cuts. They're expecting 1 rate cut. And that was to be done in June. Now it's July. So, after the data that we had on the inflation and on the labor market from US, the market is reacting it sort of negatively towards the Fed rate cut. most likely we won't have 3 or 2. I think only 2 on the whole year, 1 already done, and the second one being to do in July or October, depending how the economy will react towards the labour market and the inflation. We had somewhat of a hawkish tone from the FOMC minutes this week, but the market reacted very negative because we've seen that the RBI, the Fed is waiting for more data, and they are saying that the inflation will be stickier towards this year. So why Bostic is predicting a 3 cuts? So it doesn't make any sense. Someone say something, another person say completely different thing. The market just don't want to buy these theses. So shorting US dollar for now, maybe the March and ending of February and March would be the most, I would say, good scenario to do with Aussie dollar, USD JPY as well.
And just a quick view on gold. What are you seeing there at the moment? Because
gold. Yeah.
Well, I mean, certainly based on those geopolitical risks, perhaps Trump's tariffs, it's looking as though 3,000 US is certainly in sight.
Yes, definitely 3,000. We've seen Goldman Sachs publicly telling 3,100, and then we see JPMorgan telling publicly 3,200. So, I mean, I'm not here to compete with those big boys, right? But 3,000 definitely on the outlook for this quarter maybe. Last week I thought it would, well, maybe it takes the whole half, and then suddenly gold starts to spark even more and more and more, and now we're trading at 2,940, 2,930 if I'm not wrong. So yes, if Trump continues to do pressure in terms of the monetary policy, the tariffs, and more inflationary pressures happens around the world, and the easing cycle continues from the central banks, gold is the safe haven and will always be. So investors are outflowing from those countries and inflow into gold until 3,000, 3,100, definitely. That's a good trade.